Thank you, Mr. Chairman. Thank you again, Mr. Administrator. My first question was, is FEMA willing to delay Biggert Waters or significant parts of it for at least a year? And basically the answer I heard was no. I'm not trying to encourage that answer, but that's what I heard.
Senator.
Let me just finish the question. Part of Biggert Waters was the affordability study. That was due April 6th of this year. In the same paragraph, you said that's nowhere in sight. That'll be 2.5 years. So you can delay that or can't complete that on time or for whatever reason, and yet you can't delay the acts which will in some cases yield unaffordable rates. Doesn't that seem a little ironic, to put it politely?
Senator, I read the legislation. I've had attorneys read the legislation. Our staff's looked at it. If I had a way to do it based upon anything other than the technical implementation of the program, I don't see it. And so, again, I'm not trying to be obstructive here. I need help.
Aren't there all sorts of questions about technical implementation that are problems that make this not ready for prime time? Questions you highlighted in your reason for not being near completing an affordability study?
Senator Vitter, let me put my cards on the table. I need your help. I have not, my attorneys have not found a way. And again,
well, let me
I understand the question, sir. I do not have, and again, from our attorneys and everybody looking at this, I do not have the answer you're looking for. I need your help.
Okay,
without some additional legislative support, I am getting bound and boxed into, I cannot address, there's no provision for affordability in this bill. It is delayed and phased in, but there is no way to build affordability in. It is clear the bill wanted to go to an actuarial rate, and the affordability study was not coupled to a delay. If it had been written so that until the study is done, you would not raise rates, it was not written that way.
Let me be clear. I'm not asking you to make up an affordability section out of thin air. I'm asking you to properly recognize a lot of true implementation problems that make a lot of the implementation not ready for prime time. That goes to my third issue. You say you need your help. We all need to come together and participate in this. So my third question is pretty simple. I've put forward specific legislative and administrative proposals. So have others. When will FEMA make any specific legislative and/or administrative proposals to address affordability?
I have no answer for that, sir, because we're continuing to look at what the possible options are. And part of this is coming back to what is it that, as we go through the process of doing the implementation, we're identifying as we need more guidance or authorities, or there are issues coming up that we can't address. So we have not drafted legislation.
You say you need our help.
Yes, sir.
Many of us are willing to offer that help. We need your help as some of the experts involved. So when will we get your help? When will we get any specific proposals, legislative proposals, administrative proposals regarding affordability?
Without the study, the affordability piece of this, I would not be able to give you a specific date. Plus, this will require, as any administrative position, a lot of input to provide you a very specific piece of legislative recommendations. So I don't have a date.
So no time soon?
No, sir.
Okay, I'll submit my second question that I highlighted and ask you to answer it for the record. I do, in my time, want to highlight a few other factors that go to solvency and therefore rate levels. The best figure I have, number one, is that 40% of properties that are supposed to participate in the program do not. And there's little to no enforcement action to make them get in the program. Now that can clearly yield huge revenue into the program. Now, it will mean some additional risk, but my guess is those folks don't think they're much at risk. So I would guess it yields a whole lot more revenue than risk. That can make a huge difference in terms of solvency and what premiums need to be. That's number one. Number two, the best figure I have regarding the private side of the program, private participation, is that those private companies get basically a 30% markup, a 30% commission and servicing costs for paperwork not taking on any risk. To this pro-business conservative Republican, that seems absurd. What am I missing?
On the first piece, because of the penalties of $2,000, if you don't, as a financial institution, ensure that you have identified those people in the special risk, you're getting a lot of folks now that are finding that their mortgage companies are notifying them that they have to buy that insurance now, and because they weren't grandfathered in, they're going to the full rate, and if they fail to, they will buy it for them and put it in their account. So that's happening, Senator, and that tool of penalizing the financial institutions for not ensuring that if they write a mortgage for somebody in a special risk area and they weren't having flood insurance is exactly what the chairman was talking about. He heard from constituents that they were being told that they had to get it, and it was now at a very high rate that they had not expected. And the second piece, the private sector does more than just write. This is not an easy policy to write for the private sector, particularly for the insurance agent. They have to have elevation certificates. There's a lot of reporting. We do very specific training that they have to have. They have to be certified to do flood insurance. You cannot just be an insurance agent. You have to be certified to do flood insurance. And then there's the servicing of that. And even with those dollars, some companies have chosen not to continue to write your own. Rather large companies who shed significantly their exposure to this because they did not see it in the interest of their shareholders. So it is something we are looking at. You've asked us in this law to study that and also make recommendations. And as the rates increase, I think when you're talking smaller policies, the 30% probably makes sense in some of those. But as you start getting to higher rates, is it proportional? Should it be a 30% fixed across the board, or as it escalates, would you see that increase like you would in a lot of other situations? But that's something that we are working on and working with the insurance industry and our write your own companies.
What,